back to the Larry Kudlow Show.
Let's talk some stocks, maybe some bonds. We've got Stephanie Link, Chief Investment Strategist, Hightower Advisors, and Head of Investment Solutions, and Jon Najarian, co-founder of Market Rebellion. I want to say to both of you, thank you for your patience. We were oversubscribed today. It's my fault, my bad, and I apologize. And thank you for your patience very, very much. You're both terrific. Begin with you, Stephanie. I don't see a lot of market action. It's all sort of sideways lately. Same with bonds, pretty much. The 10 years holding, it's at 439 on Friday, but it's in a fairly narrow range. Doesn't look like much is happening. I didn't see, the debate is a gigantic political story, but it didn't seem to have much of a stock market impact. So what are you thinking, Stephanie Link? Where are we headed for?
I think we have actually sideways action until July 12th. July 12th, we get the bank earnings, and that's when it's going to start earnings season. And so between now and then, we have a jobs report next Friday, which will be big, and we're going to have, the Fed chatter and that sort of thing. But on the whole, we're kind of just hostage to the macro. Macro not so bad, though, Larry. Atlanta Fed tracker came in at 2.2 for GDP yesterday. You have some puts and takes. Housing is obviously weak, not a surprise at all. I think we're at the trough of housing. And I think on the flip side, you've got decent consumer, personal income, Michigan sentiment, initial claims, PMIs expanding, and inflation's coming down. So all of it's very supportive of kind of soft landing. Soft landing is good for earnings, 8 to 10% earnings growth. And I hope, now I know hope is not a way to invest, but I do hope that what we're starting to see in the last week and a half is a broadening out, not just NVIDIA, but it's everything else. And I think that's going to continue because I think earnings are going to be pretty decent for other sectors.
Stephanie, have you ever met Goldilocks?
Is that what it sounds
like? I just wonder whether I know you have a wide circle of acquaintances, and I hope I'm still part of it. But is Goldilocks part of that circle?
Pretty not bad, right? I know we all want to worry about stuff, but Larry, you and I talk about this. I worry when I don't worry, because that means we're complacent, right? So there's tons to worry about, but in the meantime, focus on the data. Data's not bad. Earnings should come in well. That should be supportive of stocks. By the way, not another 15% rally in the second half of the year in the S&P like we just saw, but maybe it's 3-5%. I'll take that.
There's no catastrophe out there. No catastrophe.
Not yet.
So, Jon Najarian, have you ever met Gold? Do you buy into Goldilocks? You may have gone out with Goldilocks. I don't know. I don't want to get too.
We used to have a casual relationship.
I love it.
By the way, great to be on with you, Larry, and with Stephanie. I think it is kind of a Goldilocks situation. Don't disagree with my colleague, and I think that there are some cracks in the armor. They're not major, but I'm sure Stephanie pays attention to these as much as I do. Nike, for instance. That was a horrible report. Revenue lower in Q4. I know On Running and Hoka. Stephanie's a big runner, and I work out a lot. I haven't bought a pair of Nikes in years. The Hokas and On Running are what everybody's buying now. Nike does sell an awful lot of basketball shoes and that kind of thing, but they are struggling. Lululemon's struggling. There are so many parts that are reporting bad numbers, Walgreens Boots Alliance, Warner Brothers Discovery. We could go through a bunch of them. But that's not me saying, the economy's falling apart. But it is me saying that there's a lot of big, high-profile stocks that aren't doing real well. And so, in other words, it's narrowing the outperformance. And I agree with Steph also that come the 12th of July, we're going to start seeing what the banks say consumers are doing, right down to the credit cards, which come through some of the banks, and then after the banks themselves and the pure credit cards start to report.
Stephanie, on the bank thing, which is very interesting, and bank stocks way back when used to be regarded as kind of a leading indicator of the economy's health or lack of health. So I'm just looking, the KBW Bank Index is plus 8.8% year to date, good number. some of these banks, Citigroup up 23%, JP Morgan 19%, Wells Fargo 21%, B of A 18%, Goldman Sachs 17%. Very healthy story here. There was a concern about commercial real estate loans. I don't hear much about that anymore. But what do you know about it? And in general, would you be buying the bank stocks?
Well, it's interesting you said that because I actually added this week to Bank of America because it has lagged. It is cheap. And the stress tests, we got rid of that.
Right.
It's behind us. But here's the interesting thing about the stress test. So the stress test, the regulators are making the banks carry more capital than we thought initially. Fine. All these companies have an enormous amount of capital. What is interesting is that for the first time, they told the banks they do not have to get approval from the Fed going forward to buy back stock. They can do it if they have enough capital and the boards approve it. They're on their own. This is the first time since the great financial crisis, Larry. So that to me is a very big positive. And I think the big six have more capital than the big 20, and you're going to have the haves and the have-nots. And I think you're going to see a lot of different buyback announcements coming. That'll be a catalyst. And secondly, commercial real estate, they have all pared back their commercial real estate exposure. Most of them have A properties if they have within commercial real estate. Wells Fargo is the one that has the most. It's about 12% of their loan book, but only 2% is C properties. Everything else is A and B. So you got to be really careful on just painting the brush of commercial real estate because A and B properties are okay, not great, okay. C, not so good. So you really do need to decipher between, again, also the haves and the have-nots.
Yeah. Jon Najarian, I want to just talk a moment about bonds, boring as that may be. The 10-year closed at 4.39. Actually, was up 13 basis points this week. But will investors demand higher interest rates to buy all of the bonds that the Treasury is going to be forced to sell? I mean, we saw the CBO baseline. You're looking at $2 trillion deficits as far as the eye can see, presidential politics or not. So do you think, just have less than a minute left, John, will investors demand higher rates to buy the Treasury paper?
Domestic investors, yes. Foreign investors, no. And the reason I say that, Larry, is, as you know, an awful lot of our bonds are bought by people that live outside of our borders, people who live in jurisdictions where, for instance, in Great Britain, they're cutting rates. In Switzerland, they're cutting rates. So in those comparisons, we and our interest rates look significantly higher, and I would think very attractive to those investors outside our borders.
All right. Stephanie Ling, thank you ever so much. Jon Najarian, thank you. Appreciate it. Folks, quick break, and we're going to do some money in politics with Liz Peek and Steve Moore. I'm Kudlow. Be right back.